Hello everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin and XRP. Bitcoin technicals only. XRP, Elliott Wave, I'll go into some depth into some alternates today and technicals as well for that. Technicals for Bitcoin on the daily, it's still finding support at 60,700. That's a good sign so far, but we're not seeing any strength up off this low. This is a bullish piercing pattern, but only just. The close of 25th of June is just a little bit more than halfway in the body of the 24th of June, so this is a bullish reversal pattern, but it doesn't have push from volume. Cryptocurrencies can be a bit weak up off their lows, which makes the lows incredibly difficult to identify in real time. It's usually only weeks, sometimes even months, but usually a few weeks after a low has formed that you start to see real strength in upward movement, and then you can have confidence that the low will remain intact. So it's too early yet to say if the 24th of June is going to remain intact, but it looks more likely than not. Price is still within this sideways rectangle pattern, finding support 60,700 to 58,200, bit of a zone. You could even move the lower edge of the zone down to sit on the low of the candlestick for 1st of May at 56,516. But I think it's best if you sit the support and resistance lines at opens and closes on the daily. For higher time frames, highs and lows, but for daily, opens and closes. Resistance lines 73,100 to 71,500. Price is swinging from resistance to support, resistance to support. Let's expect an upward swing to resistance is most likely. We need to see a breakout of this consolidation before we can have confidence that the next trend is underway. And because this rectangle has occurred in the context of a larger upward trend at higher time frames, it's come after upward movement. 2/3 of the time when that happens, it'll break out up. 1/3 of the time, they'll break out down. So on balance of probability, I'll be expecting an upward breakout is most likely. This downward movement did end with some strength, and that's actually really typical for cryptocurrencies for their up and down movements to end with strength. Unfortunately, the middle of movements for cryptocurrencies can also exhibit strength, and you can't tell which of those two situations is unfolding until, like I said before, possibly some weeks away. Downward movement had push from volume. Now that could be the middle of downward movement. It can have some strength in the middle, but downward movement will also often commonly end with strong volume. That could be the case here. It was the case here and here and here and here. Not the case here though. So it doesn't always work like that, but we could potentially have a low in place. We do have a bullish reversal pattern at support. There was a very strong bearish signal from on-balance volume several days ago that would suggest we might see a downward break below support of the rectangle and a downward breakout from the rectangle. But the bearish signal came while price was in the middle of the rectangle, not close to support, so it could also just have been telling us expect a downward swing to support at the rectangle. And now let's watch how price behaves here. So far, it hasn't broken out downward, but do be aware that is the risk at this point. On-balance volume suggests that could happen. ADX is telling us there's a downward trend, so we should expect downward movement to continue. It is a lagging indicator here based on a 14-day average though. RSI reached oversold, and when the market is in a larger bull market, when it has consolidations and pullbacks, within those, when RSI reaches oversold, that tends to be the end of the consolidation or pullback. RSI in a bear market, however, can reach deeply oversold. Price can continue lower, then it can exhibit bullish divergence before a bear market comes to an end. So if the bigger picture at the weekly time frame is correct that Bitcoin is still in a bull market, then RSI reaching oversold during this pullback should indicate that pullback should be complete there. Money flow's got a little way to get oversold, but this one's a little bit more sensitive and doesn't tend to get oversold as often as RSI. Not that gets oversold often though. A member of mine, a very long-standing member, kindly sent me a link to a video giving a bearish Elliott Wave count for XRP, and I had asked you all to have a look out and let me know if you come across any bearish Elliott Wave analysis. Have I missed something? Is there something I haven't considered? And I'm going to go over that later. So this is my main wave count. It's very bullish. It sees an impulse for 1, a double zigzag for 2, an impulse for 3 unfolding. The target is 40.67. That's where 3 would reach 14.72 times the length of 1, and I've got that ratio from the ratio between 3 and 1 within cycle 1. If we see that same ratio for cycle 3, that would be a realistic target for this market if this is the correct wave count. Same idea for primary 3, 14.72 times the length of primary 1 gives us a target at 28.84. Primary 3 and cycle 3 may only subdivide as impulses. Within cycle 3, primary 1 and 2 may be complete. Primary 3 may only subdivide as an impulse. Intermediate 1 and 2 may be complete. I have an alternate allowing for intermediate 2 to continue lower as a triple zigzag that has a low probability due to the less common structure of a triple zigzag. At 2, if it does continue lower, may not move beyond the start of 1 below 0.2794. Let's go to the weekly. This low here is this low here. Intermediate 1, a leading expanding diagonal. Intermediate 2 could be complete here as a double zigzag. This has a really good fit. Intermediate 3 could be underway within it. No second wave correction. May move beyond its start below 0.4309. I've drawn a best fit channel around intermediate 2. If we see a full daily candlestick above and not touching this trend line, the channel would be breached. I would have some confidence then that intermediate 3 is indeed on its way up to new all-time highs. The daily time frame, I think we going to look from this high here. This high here. We're looking at the end of intermediate 2 as a double zigzag, and this is the end of minor Y with an impulse for C, 1, 2, double zigzag, but skewed against its direction, skewed in the direction of the main trend of minute wave C. So effectively the same kind of situation as a running flat or a truncation, although it's not actually a running flat or a truncation, but the effect is the same. So this is pretty rare, but it has happened in the correct context just before extremely strong downward movement. So the strength of this downward movement could have forced subintermediate wave Y to be more brief or to be more shallow. It could have forced it to not be able to move beyond the end of W, pulling it down, pulling it lower effectively. Think of it in terms of energy. And we've got 3, brief, shallow, 4, and a final 5th wave, and I've checked this on the hourly chart. And then we have a 1, zigzag for 2. This has a really good fit. A, triangle for B, short, sharp C, really good looking zigzag. I have a little bit of confidence that that's probably the best way to label that piece of movement. And now another 1, 2, 1, 2. If minute 2 continues lower, and it could as a double zigzag, although there's not a lot of room for it to move into, it may not move beyond the start of 1 below 0.4309. I'm moving the invalidation point down there because I just want to allow for a little bit more room for movement, and because that's such an important support area that should hold if this wave count's correct. Now my main alternate on the monthly time frame is this, still seeing an impulse up here, but considering all this big sideways movement as a triangle, because it really does look like a pretty good looking regular contracting triangle, and that's the most common type of Elliott Wave triangle. If this is correct, then the triangle has A, B, C, D, E, all complete. E, if it continues lower, should not move beyond the end of C, may not move even a fraction of a cent on a tick chart below 0.2794. So both my monthly charts, my main and my alternate, have the same invalidation point at the monthly time frame. So for a bullish outlook for XRP price, cannot move beyond or below this point. It can touch this point absolutely perfectly, but a tiny movement below that means this wave count and my main monthly wave count are invalidated. So if you want to be bearish for XRP, you have to wait to see a new low below 0.2794 before you can really have confidence in a bearish outlook. And as soon as you get that, you can have confidence in a bearish outlook for XRP. So that's what I'd be waiting for. That's my line in the sand for XRP. Now this is the bearish alternate that my member linked me to. Someone had given this wave count. So they've got from here to here a 5-wave impulse. Not sure how they labeled that. The analyst just really didn't give much detail, and the chart he was using a candlestick chart, and it was so squished up you couldn't see the candlesticks. What's the point, guys? If you're using a candlestick chart, extend it out so you can see the candlesticks. They're giving you a lot of deep visual information. That's why candlestick charts are used. If you squish them up and you can't see them, you can't use them. So please don't do that. From not pointing at anyone in particular, and some lovely people do that. I don't know why. I mean, a bar chart might be better in that circumstance, but okay. From this high, this person was expecting a zigzag to complete lower. So if it's a zigzag, A, B, C, A has to be a 5-wave structure. It will fit as an impulse with 1, 2, I've checked this all on the daily, 3, 4, ending contracting diagonal for 5 with a big overshoot of the 1-3 trend line. That's all pretty good so far. From this low to this high, this will fit really well as a double zigzag. It'll also fit as a diagonal for my main wave count, so both ways will fit. This does have a pretty good look as a double zigzag. From this high to this low, this will fit as a leading contracting diagonal, but 5 falls short of the 1-3 trend line. Again, I've checked this all on all the subdivisions on the daily chart. It meets all Elliott Wave rules. It has a decent fit and a reasonable look, so this part of the wave count's fine. From this low to this high, there's a bit of a problem in here. I'm just going to go down to the daily to show you. So here's minor wave Y of intermediate 2. When you change the time frame, it doesn't snap the labels in, right? So it's not going to sit right now when I go back to monthly. But anyway, so we have A, triangle for B. Now here's the problem. You've got to be a little bit careful with Elliott Wave triangles. They're kind of rather tricky structures. Don't allow for your E wave to be this brief. That's forced. This triangle sideways movement could be a series of first and second waves. It could be part of a multiple zigzag structure, but here, for this wave count, you have to see it as a triangle. So long wave A, long wave B, C getting shorter, D even shorter, and E really short. D and E, this looks forced. This does not look like the end of a triangle. The proportion between D and E and the rest of the triangle is just wrong. It could be. This is a valid wave count, don't get me wrong, absolutely valid wave count, but it feels forced. It doesn't have the right look. So that's in here. There's a problem with this triangle. So we're seeing intermediate 2. Look, I told you it wouldn't snap back. There we are. It's back now. Intermediate 2 complete as a double zigzag. And now if this is the end of 2 and this is start of 3, how should we be seeing this chop in here? Minor wave 1 is okay. Minor wave 2 is okay. So from this high here at the daily time frame, little bit of a problem in here, but it's a problem for both wave counts. Here, I'm seeing this as an impulse. 1, double zigzag for 2, like I said, skewed in the direction of the trend 1 degree higher, which is minute degree, which is down. I'd label it a double zigzag, W, X, Y, same as the main wave count, 3, 4, 5. So that's the same. There's a problem there, but it's in the correct context, so it is acceptable. Minute wave 2, double zigzag could be complete here, and now 1, 2, 1, 2. So you've got to see this as a 5-wave structure. This is really difficult to see. Subminuet wave 1 as a 5-wave structure. Let's have a quick look at the hourly time frame. Okay, I'm trying to see if it's going to fit as a leading diagonal, and the problem is the third wave is the shortest out of 1, 3, and 5, breaching an Elliott Wave rule. So for it to not be the shortest, you can't see the end of 1 here, here, here. It has to be here. Because if it's here, then 2 is not a zigzag. Within a leading diagonal, subwaves 2 and 4 may only subdivide as zigzags, and A, B, C is invalid because B may not move beyond the start of A for a zigzag. It can for a flat, but 2 can't subdivide as a flat if it's a second wave in a diagonal. So that's invalid. So you've got to see 1 here. Now 3 is too short, so you'd have to see, and this is possible because XRP does do this, 3 and 4 somewhere down in here. But now, how is 3 going to subdivide? I mean, even for XRP, this is just starting to get really difficult. What if we've got another 3, 4 down in here? Could micro 1 be complete here? And micro 2 be complete here? Will micro 1 subdivide as a leading diagonal? There's so much overlapping in there. It's only a leading diagonal that's going to work. I'm looking at the wavelengths. 3 is longer than 1, 5 is longer than 3, but 4 is not longer than 2, so that can't be either contracting or expanding. What if 1 was complete here and 2? Well, 2 can't be a triangle. So you can't label a second wave correction as a triangle as its sole corrective structure. Look, to be perfectly honest, I've done a huge amount of research, over 308 years of data. I've done Elliott Wave counts on over 8 markets. And I did find in the historic data one piece of movement where a second wave subdivided as a triangle, and that had the absolute best fit. It looked absolutely textbook perfect. So I'll accept in extremely rare circumstances 2 could subdivide as a triangle, but I've only seen it once in 308 years of data. So I don't want to accept that. The probability is ridiculously low. So, I mean, it could be some kind of combination. Let's have a go. A triple, the proportion's absolutely horrible. Oh, look, I'm just going to leave it there. The proportion's just too bad. Let's go back to the daily. So for the very short term, to recap, there's a really big problem with a subminuet wave 1. I cannot see how it will subdivide as either a diagonal or an impulse, and those are the only two structures that this movement can be. So if XRP is in a bear market, then from this high to this low, this movement should be a motive wave structure, an impulse or a diagonal. I can't make that work. I mean, it could be that minute wave 2 is not complete. We've got some kind of correction continuing higher. So for the short term, it could resolve itself. For now, I'll leave it there. The bottom line then for this wave counters is expecting a third wave at multiple degrees to move lower. We should start to see, if we, after a downward breakout below about the 0.43 mark, a really big increase in downward momentum if this is the right wave count. But for the short term, the subdivisions don't fit. Okay, let's have a quick look at technicals for the daily for XRP. Ascending triangle, it broke out downward, target 0.4227. Before you can have any confidence and use that target, you need to see price break below support at 0.46. It hasn't been able to do so. It continues to find support around that area. That area is quite strong. Resistance at 55 cents is also strong. Breakout of the triangle, back test of resistance, moving down and away, but unable to break below support at 0.46. If we do see a break below that area though, I would expect some energy to be released to the downside. I'd start to take that bearish wave count that I just showed you much more seriously. For the short term, it is downward sessions which have strongest volume. The short term volume profile is bearish, supporting a bearish outlook for the short term at least. Last signal from on balance volume is bearish. It broke below the purple support line, back test of resistance, moving down and away. On balance volume will behave around trend lines, very much the same as price will behave around trend lines. So this is bearish for the short term, supports a short term bearish outlook. ADX is increasing, telling us there's a downward trend that supports a short term bearish outlook. It is a lagging indicator though. If there is a low in place, then this is based on a 14-day average on this chart, so it's going to take at least 2 weeks for it to turn around. RSI reached oversold on the 13th of April. That suggests that the low for that date may remain intact. It's not oversold yet. ADX tells us there's a continuing downward trend, so there is room for more downward movement before conditions get oversold. Money flow is neutral, and it's got quite a way to go before it gets oversold. That's it from me with an update for those two for you today, and I hope you're all having a lovely day.